This next project will be dealing with preparing a worksheet. So let's learn how to prepare a worksheet manually so we can then learn how to do it in Excel. A worksheet is simply a tool to help us primarily in preparing the financial statements. This is not something that we publish for the world to see. It simply is an internal tool that we would use to help us prepare the financial statements, and there are some other benefits to it as well. We're going to do it in this example manually so that we can then learn how to do it in Excel using a computer instead. Here's an example of what a worksheet looks like. You'll notice we have a column where we write the account title. We have a column for the unadjusted trial balance. We have a column for the adjusting entries, a column for the adjusted trial balance, a column for data that should be reported on the income statement, and a column for data that should be reported on the balance sheet. So the worksheet is simply a tool to make our life easier. It's going to make the process of journalizing our adjusting entries easier. So will it make it easier to journalize my closing entries, and it also will make it easier when we go to prepare our financial statements. So how do we prepare a worksheet? Well, the first step is to go to your general ledger and copy down all of your accounts and their balances as either a debit or credit, and we record that in the trial balance column. We're going to put them in the order that accounts appear in the general ledger, which is my assets first, then my liabilities, then capital and dividends, then revenues and expenses. Within the asset section, there's a certain order in which accounts need to appear. It's going to be my words crisp first, cash, receivable, inventory, supplies, and prepaids, then land, then building, and then all of my other assets such as furniture, equipment, vehicles, computers, and so forth. In the capital section, we need to list capital stock before retained earnings. Now, if we're a sole proprietorship, instead of having capital stock and retained earnings, we'll simply have the owner's name, comma, and then the word capital. And instead of having dividends, a sole proprietorship would have drawing instead. We've got all of the balances listed as debits or credits. We're going to add them up. Hopefully we'll find that those totals balance. If they do, that's great. If they don't, something's wrong. We need to go back and find it before we go any further. So here's an example of what one would look like. Notice, again, the order of the accounts. We have assets, liabilities, capital, dividends, revenues, and expenses, and my two totals balance. The next step is to record my adjusting entries. Now we still will have to take these and put these in the general journal, but for right now we're going to first record them in the adjustments column of my worksheet. We may need to add some accounts that are not already listed on our worksheet. If so, we simply record them at the bottom. We're going to key our adjustments, and by that I mean if a debit and credit go together, we're going to write a little letter beside them. For example, the little letter A would go beside the amount for the supplies expense and then the credit to supplies. That just helps us see which debit goes with which credit. When we're finished with all of our adjusting entries, we're going to add up the columns. We should again find that my debits and credits are equal. Notice my examples here. You'll see the little letters. The little letter A, for example, goes beside the debit to supplies expense and also by the credit to supplies. The little letter E goes beside the debit to accounts receivable and also the credit to fees earned. That just helps me keep straight what debit and credit go together. Add them all up, the amount of my debits, the amount of my credits, then should be equal. Step 3 is to prepare the adjusted trial balance column. To do so, we're going to take our beginning balance and then we're going to add or subtract the effect of any adjusting entries. If the entry is on the same side as my balance was, we're going to add it. If the entry is on the opposite side of what my balance was, I'm going to subtract. When I finish, I'm going to add up the balances in the adjusted trial balance, make sure that the amount of the debits and the amount of the credits again is equal. So notice, for example, with accounts receivable, we had a debit balance. We made a debit entry. Therefore, my debit balance got bigger. We would add those. If we look at unearned rent, we had a credit balance. Then we made a debit entry. The entry is on the opposite side, so we had to subtract. Again, add up debits, add up credits, and they should be equal. Step 4 says to take every balance from the adjusted trial balance column and copy it either to the income statement column, if it's a revenue or an expense, or to the balance sheet column, if it's an asset, liabilities, capital, and dividends or drawing. Now, dividends or drawing don't actually go in the balance sheet itself. However, we will copy them to the balance sheet column because we don't have a separate column for the statement of retained earnings, which is where they actually go. Be careful when you copy. If it's a debit balance, copy it to a debit column. If it's a credit balance, copy it to a credit column. So notice cash down through drawing went to the balance sheet column. Fees earned down through miscellaneous expense went to the income statement column. Notice now my totals for the income statement column don't balance. the totals for the balance sheet column do not balance either. Step 5 says we want to wrap things up down at the bottom here. We should find, when we total up the two columns, that two things hold true. First off, the difference between the two totals in the income statement column, the difference between the two totals in the balance sheet column should be the same. So if you've got a $4,000 difference between the totals in the income statement column, you should have that same difference in the balance sheet column. Secondly, the difference should be off in the opposite direction. If the income statement credits are bigger than the debits, then the balance sheet debits should be bigger than the credits. So same amount, opposite direction. The reason these two figures don't balance is best understood if we were to look at our income statement. The total amount of my credits is my revenues. The total amount of my debits is my expenses. Well, we don't really expect revenues and expenses to ever equal, do we? Instead, we always hope that my credits are bigger than my debits. In that case, we would have a net income. If it was a net loss, we would see my income statement debits were bigger than my income statement credits. At the bottom, though, we want to wrap things up so they balance. We accountants like things that balance. And so we're going to record the positive difference between the two columns beneath the smaller total in the income statement column and also beneath the smaller total in the balance sheet column. Let's look at an example. Notice that the difference between the 97.55 and the 16,960 is 72.05. These totals differ by 72.05. The difference between these two balance sheet totals is again 72.05 also. Notice they're off in the opposite direction. Here we have more credits than debits. Here we have more debits than credits. We're going to take that positive difference and write it beneath the smaller total. So for the income statement, the 97.55 is smaller than the 16,960. We'll write the 72.05 below it. In the balance sheet, the 16,440 is smaller than the 23,645. We're going to write the 72.05 difference below it. Then we're going to recompute my two totals again. We're going to take the income statement. We've got 97.55 plus 72.05 gives me 16,960. 16,960 plus 0 is 16,960. On the balance sheet, 23,645 plus 0 is 23,645. And 16,440 plus 72.05 is 23,645. So notice now my final income statement totals do balance and my final balance sheet totals do balance also. We're going to go through an example on our own. Now, I have already filled in the trial balance column and I have identified everything as a debit or credit. Let's move on next to make my adjusting entries. The first adjusting entry says that my depreciation on my equipment is $5 a year. Well, we know that the adjusting entry to record depreciation would be a debit to depreciation expense and a credit to accumulated depreciation. So before we put that in the journal, we're simply going to record that on my worksheet in the adjustments column. Notice I put a letter A beside the credit to the accumulated depreciation, and I put also the letter A beside the debit to depreciation expense. My next adjustment says services of $9 have been performed for customers but not yet billed. That adjusting entry requires that I debit accounts receivable to make the asset go up. I credit fees earned to make that revenue go up. Well, again, we'll first record this on the worksheet. So on the line for accounts receivable, I'm going to record my $9 debit. On my row for my fees earned, I'm going to record my $9 credit. My last adjusting entry is to accrue interest on a note receivable, $2. That requires a debit to interest receivable to make the asset go up, a credit to interest earned or interest revenue to make that revenue go up. Now again, the first place we will record this is in the adjustments column of the worksheet. We will still have to come back later on and take it and put it into the journal and post it as well. That's all my adjusting entries, so I'm going to stop and add them up. And we see that the amount of my debits and the amount of my credits is indeed equal. My next step is to figure the adjusted trial balance amounts. The adjusted trial balance amounts. Well, let's see. Cash had no entry, so it didn't change. It was a 31 debit, it becomes a 31 debit. Same thing for notes receivable, didn't change. Accounts receivable had no balance to begin with. I made a $9 debit entry, so my new balance is a debit of 9. Interest receivable, we had a 0 balance. We made an adjusting entry of a 2 debit, so my new balance is a debit of 2. My equipment, no entry, so it still is a 40. Accumulated depreciation goes right along with the assets. We had a credit of 10. We credit it for 5. Now my credit balance is up to 15. My next several accounts did not change. Fees earned had a credit of 43. Made a credit entry of 9. Gives me a new credit balance of 52. Interest earned, a balance of 0, a credit of 2, gives me a new balance of 2 credit. Rent expense, 24 debit, Didn't change. Depreciation expense was 0. A $5 debit gives me a $5 debit balance. I stop, I add up my debits and my credits, and I come up with 130. Those totals again balance. My next step is to take each number from the adjusted trial balance column and copy it either to the income statement column or to the balance sheet column. Everything from cash down through drawing or dividends will go to my balance sheet column. Everything from fees earned down through depreciation expense will go to my income statement column. Refigure my totals. All right. Now I have 29 and 54 in the income statement column. That's the difference of 25. 101 and 76 in the balance sheet column. That also is a difference of 25. And notice we're off in the opposite direction. In the income statement, I had more credits than I did debits. In the balance sheet, I had more debits than credits. That's a good sign. Same amount, opposite direction. The 25 represents my net income. I know that because my 54 total in the income statement is bigger than my 24 debit total in the income statement. Therefore, my revenues are bigger than my expenses. I have a net income. We want to make it balanced at the bottom. I'm going to take the amount of my net income and I'm going to record it beneath the smaller total in each column. In the income statement, that means I'm going to put it beneath the debits. In the balance sheet, I'm going to record it beneath the credits. And then I'm going to go back and recalculate my totals one more time. 29 and 25 is 54. 54 and 0 is 54. 101 and 0 is 101. 76 and 25 is 101. Notice now I've also to the left written net income beside the amount of my 25. Now my two income statement totals do balance. My two balance sheet totals balance also. Let's do one more example. And the only change we are going to make here is that we are going to change the amount of cash and then the amount of my rent expense. Everything else stays the same. So you notice I've recalculated the balance for the trial balance and also for the income statement and the balance sheet columns. Notice now with my totals on the income statement column, my total debits are 59, which means my expenses are 59. My total credits or revenues are 54. This time I don't have a net income, but I have a net loss. Notice, of course, that the difference between my two totals in my balance sheet column also is 5, and that they are off in the opposite direction. More credits than I have debits in the balance sheet column. Again, to make a balance at the bottom, the same process will take place. We want to record the positive difference beneath the smaller total. So when the income statement total, that means I'm going to record the 5 directly beneath the 54, with just a 0 beneath the 59. And in the balance sheet column, I'm going to record the 5 beneath the 71 with a 0 beneath the 76. This time I've labeled it as a net loss, not a net income. And I'll recompute my totals again. Again, they balance 59 and 59, 76 and 76. So the only difference we see, if it is a net loss, my positive difference is going to go in the income statement credit column and in the balance sheet debit column. So the only difference between the two is in which column those balancing totals will appear at the bottom of your worksheet. That concludes the worksheet. Realize that the purpose is to make life easier for us. For example, if I was to go and prepare my income statement right now, I have all my data right here handy. I have all the numbers I need for the balance sheet with the exception of my ending capital or retained earnings, which would come from my statement of owner's equity or my statement of retained earnings, depending upon the nature of organization here. Preparing my adjusting entries to put them in the journal will be very simple. It simply will be a copy job now that I've done the hard work. So that concludes our discussion of the worksheet.